All right. What's happening, friends? Happy Friday and also happy New Year. We are officially in 2025, the first live stream of the year. Sorry that we had to do it an hour early tonight, guys. Typically we were talking about this in the Discord group earlier. And by the way, if you're not in the Discord group, there's a link to it in the description. Free to join. You should definitely jump in there. But Zal asked me if this was going to be like the normal time. So we've kind of strayed from the regular dividend happy hour schedule. Usually it starts at 5 p.m. Pacific time, 8 p.m. Eastern time. But this last month, I feel like, guys, we've really been all over the place with it. Some days we're doing it on Saturdays. Some weeks we don't even do it at all. Sometimes we start an hour early like today. So I apologize. The holiday season has really like thrown me off my normal routine, my normal schedule. And my wife and I have dinner plans tonight, which is why we're starting it an hour early tonight. But don't worry, guys, at some point soon, hopefully next week, we'll get back to normal, and we'll hopefully soon, now that the holidays are, over and done with, we'll be able to consistently be at that normal schedule. So I just want to apologize for throwing a wrench in all of this one. But guys, welcome back to the Dividend Happy Hour. See who we got. Looks like there's 82 of us in the stream right now. Hope your guys' new year is off to a great start. Episode 122. I'm trying to remember the last time we did a live stream, guys. I feel like it's been like a couple weeks. Has it been 2 weeks? Because we didn't do last week. We might not have even done the week before, but anyway, it feels like it's been a very long time. But I'm stoked to be back with you guys. Good to be back in the saddle. And why don't we kick this thing off the best way we know how? So grab whatever it is you're sipping on, guys. Let me crack this thing open. There we go. So grab whatever it is you're sipping on, guys. Here's to you. Thank you so much for hanging out with me tonight on this fantastic Friday night, kicking off 2025 with a bang. Here's to you guys. And also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow, because that's really what's bringing us together tonight. But either way, cheers. Oh, that's so good. Oh, love me some Fresca. Thank goodness for Fresca. So refreshing. Guys, let me know a few things here in the live chat before we continue on any further. Number one, I want to hear, what did you buy this week? What was your first purchase of 2025? I want to know that here in the live chat, number one. Number two, I want to know, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Obviously, I got me a little Fresca here. Delicious. Love it. But yeah, let me know what you guys are sipping on. Number two. Number three, has anything cool been happening in your guys' portfolio since we last spoke? We closed out the year. Maybe there were some big milestones to close out 2024. I feel like, just from what I've seen in other YouTube videos and from comments and stuff like that, it seems to me that December for a lot of people was a record month of dividend income. So I'm sure that is the case for some of you guys out there. But either way, let me know in the chat if anything cool has been happening in your portfolio lately. And number four, do we have any first timers here in the Dividend Happy Hour? Let us know in the chat if this is your first time tuning into the live stream. In case it is, first of all, welcome aboard. I'm so stoked to have you in the stream. It's always a lot of fun. There's no rhyme or reason to these live streams. It's exactly what the title sounds like. It is a happy hour. We're just coming together, talking stocks, and it's different every single time. But anyway, it's just a fun weekly thing where we get to come and hang out and just talk stocks and shoot the breeze. That's kind of the whole fun of it, I think. No plan is sometimes better than having a plan. So yeah, let us know if this is your first time here in the stream. And in case it is, we do this typically every Friday night. The normal, I kind of addressed this at the start of the stream, but the normal Dividend Happy Hour schedule, it starts Friday nights, 5 p.m. Pacific time, 8 p.m. Eastern time. But this last month, really, it's been so all over the place. And I always announce it beforehand. Sometime early Friday, midday Friday, I'll always announce the live stream schedule. The live stream schedule for the week, whether it's normal time or an adjusted time, or whether we have to reschedule it. Either way, you can always see the announcement over on the community page on my YouTube channel, or it'll always be posted as an announcement in the Discord group, which is another reason you should join. Once again, it is free. There's a link to it in the description. So let me go with all of that behind us, let me go up to the top here and see who all we got in the building. Let's see here. Going all the way up to the very tippy top here. What do we got here? The first comment I see actually is from, who we got here? Pat. What's going on, Pat? Good to see you, my friend. Looks like you are in Florida for the winter. Nice. Very nice. My man Zal is here sipping a Jim Beam and Green Monster. What's Green Monster, man? Let me know in the chat. That sounds interesting. We got Rust here, aka Nathan. What's going on, my friend? Sipping a little kombucha. Nice. I like kombucha. We got Nick at Night. What's going on, man? Good to see you in the stream. Salvatore's here. Of course, Salvatore's here. Happy to see you, my friend. Sharia's is here. What's going on, my friend? We've got CJ Do Work in the building. What's up, CJ? Mike's here. Nils is here all the way from Germany. It is 1 a.m. over in Germany. That is dedication. Nils, thank you so much for tuning in so late at night. Andrew's here. What's up, Andrew? We got ex-Dividend Dad. What is going on with Two Hearted Ale? Sounds good. Let's go. Let's do it. Yeah. Talking trash 24 hours a day. So the Discord, just once again, it's basically just a big group chat. It's kind of similar to, what we're experiencing here in the live chat. In fact, it's a lot of the same characters. So if you like talking stocks and you want a place to do it, definitely join the Discord group. So anyway, Shoddy is here. Happy New Year, my friend. Evolution Rich is here. What's up, Rich? Nieces and nephews, what's going on? Sir Dude Bro, man. Dude Bro, what is happening? Good to see you. Fizzy in the bizzle. Fizzy Turtle, what's going on? Thieve is here. What's happening? Oh, Al Capone in the building. Whoa, what is happening? We've got the Lean Mean Dean Machine as well. What's up, Dean? Pat is here. Patrick Taylor, what's going on? Even if we are dividend investors and like consistency. Yeah. It's been a minute, Sir Dude Bro, man. John's here. John McConnell, new to the channel. Happy to be here and liking the content. Thank you, my friend. I'm really happy to hear that, and I appreciate all of the support. I hope you enjoy this stream. It's a lot of fun. I always look forward to doing this every single week. Not every single week, ideally, but I look forward to this every week. This is one of the highlights of my week, is doing this live stream and seeing you guys. Marcus is here. What's up, Marcus? Tony's here. Wiffle Ball Tony. What's up, Tony? Let's see. Chris, what is going on, my friend? Yes. Okay. There we go. That's right. Zal's got the schedule down. Kevin's here. What's going on? Cheers, Kevin. Manny is here as well. What's up, Manny? Salvatore, do you have questions for me? Drop them in the chat. Let's see. Al Capone, do you own any of the Mag 7? Not directly, I don't. Just through the S&P 500. That's my only exposure. Ooh, Alex with some tea and honey. Sounds good. Blair picked up some Vici. Nice. Oh, interesting. So, Blair, this is interesting. So your portfolio is over 80K and dividend income of 9K per year. This means that your dividend yield is somewhere over 10%. I'd be curious to know what the makeup is of that portfolio. That sounds a bit risky, my friend. Let us know. Give us some color there, if you don't mind. Let's see. Let's keep going. XGX. What's going on? Picked up some J&J. There we go. Nick's here. What's up, Nick? Yeah, I'm seeing a lot of just as far as purchases, that's kind of what it's looking like here. I see some Cintas, I see some Nike, J&J, Kimberly-Clark, interesting. A lot of SCHD, of course. That's always a staple. UPS, Mike picked up some UPS, nice. Let's see. Yeah, Zhao with some Old Dominion, Lowe's, and Nike. There you go. Let's see. Yeah, Fresca is fire. Sparty Party. What's going on? Newcomer. Love the live streams. This week buys Microsoft and Visa. Good buys. Pro Level Athletic, first time as well. Welcome to the stream. There we go. Thieve, cool little milestone. My portfolio, or my goal was a 10K portfolio. by the end of the year. Hit that goal and keep climbing. Nice. Well, congratulations on the on hitting that goal. What do you guys have? What do you guys have planned for 2025? What are some of your big investing goals here for this year? I'd be curious to know. They could be like portfolio value goals. They could be dividend income goals, contribution goals. Maybe you've got goals to trim your portfolio to a certain amount of stocks or add a certain amount of stocks. What do you guys have planned for this year? What's on the agenda? I'd be curious to know. Salvatore with a good question here about adding 2 positions without much money. So we'll circle back and answer that. As I go through these chat, guys, I'm going to save some of these questions that jump out to me, and once we get caught up here, we'll go through them. Yes, Sir Dude Bro, man. Of course you picked up some Broadcom, of course. Let's see. XGX, first time here. Nice. There we go. Very nice. First live stream and first beer of the year. Very good. Love it. Love it. Yeah, I'm seeing a lot of J&J, a lot of Nike, definitely some Realty Income as well. Henzo's first time in the stream. What's going on, Henzo? And Tennis Wolf as well. Good to see you guys. Let's see. Yeah, some more J&J. Nice. Shoddy hit 300 of SCHD, 300 shares. Good job. Al Capone, first time in the stream as well. Okay. Yeah, Shannon with nice little shopping spree here. Waste Management, looking good. Realty Income, Chevron. These are all looking really good. AMT is seeing a pretty substantial drop. I don't know if you guys listened to or have heard of the podcast called Business Breakdowns. Really good. I mean, it's exactly what it sounds like. Every episode, they just go through a different business. They talk to like an analyst or someone who's got some, good information on the company, or sometimes it's an industry as a whole. But I recently listened to an episode on AMT, American Tower Corporation. It was really good. So I'd highly recommend checking that out. Nice, Mike. Jumped over $3,400 in annual dividends. Good job. There you go. Ooh, Salvatore with another good question about a potential correction. Okay, we'll definitely touch on that. Yeah, Daniel's got a good question about taxes. We'll take a look at that as well. Oh, Gerald from Las Vegas. Nice. My neighbor. Good to hear from you, my friend. Welcome to the stream. Oh, that's a bummer, Lance. Oh, man, financial crisis and had to sell 70% of my portfolio. Excuse me. I just started and it hurts so bad. I'm really depressed about it. Lesson learned, build cash. Well, yeah, very important lesson to learn for sure. And now you know. And the good thing is, Lance, I mean, don't beat yourself up. Don't beat yourself up. I mean, these things happen. Life can certainly get in the way. And the good thing is you kind of just started, right? So you're at the very beginning stages of your investing journey. So with that said, it shouldn't be too hard to build back up to where you were from here. So keep your head up and don't stress about it. You'll get back to where you were and then some, So yeah, don't let life get you down. Sometimes things get in the way, but you'll bounce back, no doubt about it. Just keep buying. Always the ABCs of investing. Me and Ari were talking about this the other day. The ABCs of investing, starting it now. Always be collecting. At the end of the day, guys, that's kind of what we are as investors. We're asset collectors. We're building up our portfolios, are just our collection of assets, and we're continuing to build that up every single week. So, Lance, everyone else, just remember the ABCs. Always be collecting. But Lance, man, seriously, don't stress too much about it. It'll be okay. I promise you it'll be okay. So it's good motivation, it's good motivation to hit things hard. And yeah, like I said, you'll bounce back, no doubt. Ooh, Skulk in the building. What's going on? Picking up a bunch of Vici and Realty Income. Nice. Very nice. Ooh, Dean with some nice pickups. LYB, Coca-Cola, and HVT is interesting. That's Haverty Furniture. Huh. Okay. Ooh, good question on VT and VTI. We'll take a look at that. Trevon, what's going on, my friend? Good to see you. Jay's here as well. Fast Eddie. Is this early? Yeah, this is early. This is early. It is. We're an hour early. My wife and I have some dinner plans. I'm really hoping that next week, guys, nothing will. Um, I'm really hoping that next week nothing will come up, so we can just do our regular stream at our regular time. So, invest right. What's going on? Morgana says, or Morgana, there's a company called WiseTech on the ASX ticker. I haven't heard of them. Those stats sound nice though. 12.3% dividend growth, 20% payout ratio. That sounds good. I don't know. I'm really not familiar with any of the ASX stocks. That's the Australian Stock Exchange. And it's just, I don't think I've spent a minute looking at stocks on that exchange. So I'm not really certain about it. All right. I think I'm almost caught up. Yeah, there's a good question about bonds. Kevin wants to know about 100K in the portfolio. Good questions tonight, guys. Let's see. Okay, I think I'm almost caught up, guys. I'm a few minutes behind. And we're almost caught up now. Ron's asking about the walk to 100. We'll take a look at that. So far, we've got 7 good questions to go through. Rich wants to know about ADM, Archer Daniels Midland. It's been a while since I've looked at that one. Manel wants to know about Rentokil. Okay. All right, guys, we are almost. Ooh, Sparty Party. Good question. Okay. Let's see. All right. So okay, really good questions. Okay. So we've got 11 questions saved, guys. We'll try and bust through them in the next 40 minutes. We'll kind of do it rapid fire because this is a lot, and I'm sure that more will come up along the way. And I want to apologize in advance before we start going through these. You know, there's almost 180 of us in the stream right now. And I try to get to every question or as many questions as I can. But sometimes I miss some. So if for some reason I miss your question or don't cover it or something like that, I do apologize. It's not intentional. Sorry, I'm looking at the chat now. It's not intentional, and I do try and get to all of them that I can, but I'm only one guy. But anyway, let's go through this, starting with this first question here from Salvatore. How do we add to positions when we don't have any money to deploy? So that kind of makes it tough, right? The only 2 ways that you can build up, well, actually 3 ways, I guess. There are 3 ways that you can build up your positions, or basically, yeah, we'll just leave it there. There are a few different ways you can build up your positions. Number 1 is adding fresh new capital to your portfolio, which it sounds like you're a bit tight on right now. So if you don't have any money to deploy, you kind of have to rule that one out. Number 2, you could sell out of some positions in your portfolio. Maybe you're looking around, there's some positions that you're liking better than others, or, you know, maybe there's some that you're okay letting go of. You're just kind of weighing the opportunity cost. You know, maybe you see an opportunity to sell out of a position and reinvest that money into this other one that you're wanting to build up if you think it will be a better long-term investment. Basically unlock some capital from another position, put it into the one that you want to build up. That's the second way that you'd be able to add new positions without having money to deploy. And the third way just comes from dividends. You know, when you get those dividend payments, instead of reinvesting them back, dripping them back into the positions that paid the dividend, turn off your drip, just collect those dividends as cash in your account. And then you can use your dividend income to add to positions without having to add money from your checking or savings account. But really, those are the few ways that that you can go about adding to positions when you don't have a whole lot of money to deploy. Outside of those things, I can't really, those three ways, I can't really think of how else you would build up your positions. Maybe you guys can, maybe there's some obvious one I'm missing in the chat, but I think those are the only ways. So good question though. Salvatore's got another good question here. Do you think we get a nice correction, 10 to 15%? I have no idea. I really don't know. My only reasoning for thinking that we could is just that these last couple of years have been extremely hot. The S&P was up mid 20% in 2024. I don't remember how much it was up in 2023. 2022, it was down. 2021, it was up. But things have been pretty hot these last couple of years. And that's really the only reason I think, yeah, we could see some more tempered returns here moving forward. We could even see a slight correction. That's really my only basis for thinking that. And it could totally not work out that way. Like the market could just as well continue to go up here in 2025. It depends on a myriad of variables. A lot of it depends on how people are feeling about the market as well. So yeah, we'll see what happens. But in the meantime, just remember those ABCs. No matter what happens, always be collecting. That's how we do it. So yeah, I don't know. Really have no idea. I wish I did though. And if I did, you guys would be the first group of people I would share it with. So, Nathan says he thinks we're in the roaring 20s. History repeats. Could be. It'll be interesting to see what happens. Okay, so Daniel here says, can you explain why everyone freaks out? Why everyone freaks out about taxes with dividend stocks? I'm 24 and trying to figure this out. I can't wrap my head around the tax panic that everyone has. Yeah, I think I know what you mean. I don't think a lot of people necessarily freak out about taxes. At least we dividend investors, or those of us who invest in dividend paying stocks, I think a lot of us pretty much understand that it's just, dividends in a sense are kind of, taxes in some capacity are kind of just a way of life. They just kind of come with the territory. And at least from my point of view, I'd rather not pay taxes, but I also wouldn't want to not receive dividends just because I have to pay taxes on them. And kind of the symmetrical argument that goes along with that is like you wouldn't turn down a pay raise at your job just so you can avoid, just because you'd have to pay more taxes. You know what I'm saying? You would definitely take that raise at your job. And I think the same kind of way of thinking applies to dividends. I do think that the tax implications of dividends are used as for people who are not who don't consider themselves dividend investors, who are against investing in dividend paying stocks. The tax component of it is one of the things they like to bring up. And I understand it. It's not ideal, but like I said, it kind of just is what it is. It comes with the territory. And if it is that big of a deal to someone, you can avoid paying taxes by just investing in your Roth IRA. And also, it's important to remember as well, in retirement, if you make up to, let's say that you're only 100% of your income was coming from dividends, which I think, I can't speak for everyone, obviously, but I know that there's a certain subset of us here in the stream who have that as their goal. Someday, your goal is to live solely off of your dividend income. And in that stage, I think if we're just talking qualified dividends, this doesn't apply to, I don't believe this applies to ordinary dividends. Maybe it does. Probably does with deductions and stuff, but there you can make up to a certain amount. If you're married, I think it's somewhere close to $100,000 if you file jointly. You can make somewhere close to, and these are very rough numbers, definitely, like, I'm no tax expert, clearly. So double check this stuff yourself, look into it for yourself. But you can make somewhere close to $100,000 a year in qualified dividends without having to pay taxes on them. It's something like that. So there are ways to avoid paying taxes on dividends, but to me, it does seem like it's kind of one of the low-hanging fruit reasons that people like to bring up to argue against investing in dividend paying stocks and go for more growth stocks. But at the same time, you know, you're going to have to pay capital gains tax when you go to sell your non-dividend paying stocks down the road. You know, so that's not ideal either. I think there's just with any style of investing, there's going to be pros and cons. So hopefully that makes sense. Yeah, I figured a lot of you guys um, would be like Sir Dudebro Man here. Where is it? One of those 100% dividend people. Yeah. Um, let's see. Okay. So moving on to the next question here, guys. This one's from the Hoove Man. That's quite the name. What are your thoughts on VT and VTI? I don't have any super serious opinions about those funds. I think that they are, you know, kind of fine if you're looking for a one and done fund to invest in, you know. I think if you just wanted to keep it as simple as possible, I think you'd be just fine investing in VT or VTI. VTI, let's actually look. Let's look at the returns. Bear with me, guys. Let's look at the returns here. So let's go VT. We're going to compare. This is where it gets a little bit dicey, or it can, is comparing the, sorry that that's so small. How do I make it bigger? Bear with me, guys. One sec. How's that? That's a little bit better. So I think if we go over here, it's whatever. Okay, so let's compare VT, VTI. We'll add in here over on Seeking Alpha. What am I looking for? Performance. So total return, we'll add VOO, VTI, and let's order them like that. So it can get a little bit questionable when you compare the returns of these two to the S&P, I believe. Now, in the last year, VTI and VOO are neck and neck. VTI is trailing by about 9 or 8.5%, it looks like. Where's that 9.5? Yeah, it's 8.5%. If we look over the last 5 years, still VTI and VOO are very neck and neck. There's about a 5.5% spread here, 5.8% spread or something like that. VTI is trailing by, or VT is trailing by quite a bit. So there is that. And if we zoom out across an even longer period of time, the spread gets a little bit, well, not a little bit, the spread gets pretty considerable between VT and these other two right here. You know, VTI is trailing by about 17%. So ultimately, you'd be best off going with VOO. It seems like across all time periods. But I do understand the draw to other funds like VTI, which is going to have more diversification than VOO. I think if you look at the top 10 holdings, they're going to be pretty similar. But some people want like the 4,000 different stocks that come with VTI. They feel better with that diversification versus the 500 and the S&P 500. And, you know, for people who want international exposure, I understand the draw to VT in that regard. But at least over the last 10 years, it has resulted in lower total returns. So it hasn't been without its downsides, I suppose. But that's to the extent that I think about these funds. Like I said, I think if you're looking for something one and done, both of them are fine. It doesn't seem like it does you any favors, at least not in the last 10 years, to have the international exposure offered by VT. So just based on this, these past returns, which may be different in the future, you'd be better off going with VTI and VOO. And I think the general rule of thumb is just when in doubt, go with the S&P 500. It's been the tried and true. Like there's a reason that is the gold standard benchmark that a lot of us use to, you know, compare our returns to. So anyway, hopefully all that makes sense. Good question. Really good question. Okay, Thieve, another great question. What are your thoughts on having bonds in the portfolios, like ticker symbol Mint? I'm not familiar with this one. So let's jump over and take a look real quick and see what it is. Enhanced short maturity active exchange. Interesting. Okay. So fixed income markets. Yeah. US dollar denominated investment grade debt bonds. Okay. So they're corporate bonds, it looks like, right? What's the stats looking like? So generally speaking with bonds, I don't, oh, nice dividend stats. Look at that. 5.2% yield, 14% CAGR. It's pretty nice. You don't usually see that with a bond fund. The name's Bond, James Bond. 0.35% expense ratio. That seems a little bit high. How does that compare to BND? Much nicer expense ratio on this. Yeah. So anyway, generally speaking with bonds, I think if you are that risk averse and you want something more guaranteed that's not going to fluctuate, if you really are looking for fixed income and you don't want to have to worry about the volatility and the ups and downs, then yeah, I think bonds are probably a fine way to go. And the thing is, right now, you could probably get some decent cash flow investing in some of these bond assets right here, just with interest rates being up. Um, so yeah, I think that for now, it's probably not a bad way to collect some cash flow, but over a long period of time, it does seem that securities, stocks tend to be the better bet if you're looking for just long-term gains and stuff like that. But yeah, I think if you want fixed income, bonds are a good way to go. Kevin, great question. I love it. Are you going to hit 100K in the portfolio this year, my friend? I sure hope so. I really do. I'd be surprised if I didn't. My goal by the end of the year is to be at, my initial goal was 100K, but Ari pressured me into bumping that up a notch. And so my target portfolio value goal by the end of 2025 is going to be 125,000. Now, as far as hitting 100,000 goes, just for my contributions, just for my contributions, I'll be able to do it if the market stays flat. Even if it goes down a little bit, I'll be able to hit $100,000 in the portfolio, which is awesome. So yeah, I think 100K is totally doable. For me to hit that 125K, I'm going to need some help from the market gods. I'm going to need another good year, just like last year. So we'll see what happens when it comes to reaching these types of goals. These portfolio value goals, there's so much that's outside of our control. And I like, it's good to have these goals. It's good to have something to shoot for. And I think you should aim high, but at the same time, you need to manage your expectations along the way, because a lot of it really does depend on what the stock market does. When it comes to values, you are at the mercy of the market in that way. So I'm not going to be no matter what happens this year and where my portfolio value ends up, I'm not going to be too distraught about it either way. Remember, this is a long-term game. I'm going to be doing this for the next 60 years, hopefully 70 years or longer. So I've got time. I definitely have time to hit that 100K. Really good question, though. Thank you for asking this. Next one's from Ron, who says, are you going to do the walk to 100 on Monday and do that each first Monday of each month? No, I have no intention of bringing the walk to 100 stream back. What I would like to do at some point, though, I've been thinking about this quite a bit. At some point, because I did like the walk to 100. I think that there was an important message behind it, which really just spoke to consistency and, when it came to walking those 100 calories to get those 100 calories. So I think there was some good that came out of it. What I'd like to do at some point is I would like to turn the walk to 100 into some sort of challenge. You guys have probably seen things like 75 hard, where it's, I don't remember what the specifics are. It's like you have to do 2 workouts a day for 2 hours total. One of them has to be outside, no drinking. You have to read a certain amount. Anyway, there's a list of things that you have to check off every day to complete the challenge. And so I think it'd be fun to make something like that based around walk to 100. And I was thinking it could be for 100 days. Okay. And I'm still fine tuning it. So if you guys have any ideas, let me know here in the chat. It could be Manel, man, I've seen your comment, like probably 9 or 10 times so far. I have your question saved and I'll get to it. You just have to give me some time. It is saved though. It's actually coming up in 2 questions, so we'll get to it. But I keep seeing you post the same comment over and over. Anyway, what I was going to say for this walk to 100 challenge, I was thinking it could be something like reading 20 minutes a day, could be investing every single week. I think those are going to be easy for us investors because I think all of us are already doing that. And I think there should be a workout component to it as well, whether it's walking 100 calories, walking till you get 100 calories every day, or doing some sort of activity to burn 100 calories, or something like that. I'm still, like I said, fine tuning all the details, but I like the idea of doing something like that with the walk to 100. So yeah, there you go. 100 days, try to do as many push-ups as you can in a row. Any missed, you invest $100. Yeah. So anyway, there's a lot of things like that could be a part of this challenge, but I think that would be a really fun thing. And I need to figure out the best way to facilitate that, because I think it needs to be one of those things where anyone who participates can hold each other accountable. So you have to like share what you read for the day or listen to or whatever it is. But anyway, like I said, I'm still fine tuning all of these details. But as far as walk to 100, that's the capacity in which I would bring it back. Yeah, I will definitely get to Rentokil. Like I said, I had his question saved from the very beginning. We're just going in order from how they were asked. So I will get to it in just a moment. Let's just move on to this next question here. So this next one comes from Rich, who wants to know about Archer Daniels Midland. He says it's a low. Let's take a look at it. It's been a while since I've looked at ADM. So let's check it out. Let's go over here to Snap Stock, ADM. All right. Wait for it to load up. Is ADM a dividend king? I think they're at least an aristocrat. Let's see while this is loading. We're in the process of, you can see some of this stuff is taking a good minute to load. This has been happening the last few days, and we're in the process of switching servers. So hopefully that'll be behind us here pretty soon. No, so 31 years of growth. So they are an aristocrat. So the share price has definitely fallen off a cliff. Wow. Down 27.5% in the last year. This is interesting. It's not bad. The 5-year revenue CAGR is nice at 10%. 10 years still showing revenue growth. But I can't say I look at this and I'm super excited about it. And if I kind of think too at this point, if I'm looking at something like this, if I'm looking at the financials and they're just not jumping out to me, then it's probably not one that I would have any interest in investing in. If it doesn't jump out at me right off the bat, then I'll probably don't want it. Earnings per share has been pretty good since 2019. Really nice trend here. Free cash flow per share. Looks like there were a couple rough years right in here, but it's since recovered. And if we exclude these years, the trend is up and to the right. So that's good. Margins have been going up. That's really good to see. Very low margins though, right? Like single digit gross profit margins. But it is good to see them going up. Net profit margin, same thing. Seems to be going up. Free cash flow margin, yeah, not bad. Net debt to free cash flow is not bad. 2023, it was only 2.8. That's fine by me. Interest coverage might be a little bit low. I'm going to use the Kevin Burgess rule. I think he looks for an interest coverage ratio of 8 or above. Prior to 2023, it was there. I think that's what Kevin uses. Maybe I'm thinking of something else, but dividend growth does look pretty good though. Like we saw 31 years of growth. The yield is way above average right now. way above average. So you can lock in a nice yield right now, nice dividend growth rate. That kind of makes Archer Daniels Midland double trouble in the dividend department. In 2023, I don't know what the raise was in 24, but really solid raises these last couple of years. And the dividend still looks to be pretty well covered. There were a few years where it was going down, the payout ratio down as low as 20%. But even now in the trailing 12 months at 57%, that's not bad. Free cash flow payout ratio looking really good too. So yeah, I think the dividend looks pretty well covered. Returns aren't anything to write home about. So I would say, you know, there's some good and some bad. I shouldn't say bad. There's some good, and then there's some just kind of uninteresting. I think that generally speaking, that's kind of my take on this company, just from a financial standpoint. It's uninteresting to me. I guess I just don't really see the appeal beyond the dividend stats. But then again, I guess if you're looking for something with an above average yield, nice free cash flow yield too. If you're looking for something with an above average dividend yield that can offer dividend growth, this would be a decent one to consider. I guess if you are prioritizing the dividend stats, this would be a good one to consider. But I don't know. Financially, it's not really. This is kind of. This just doesn't jump out to me, I guess. Well, with that, maybe it's just the revenue, actually. Sorry, guys. Now I'm thinking out loud here with this. I keep going back and forth. Maybe it's just the revenue, because it's been spotty here, but the earnings per share has been really nice these last few years. Looks like the trailing 12 months was a bit rough, but or 2024 basically, but this is a nice stretch for the earnings and the free cash flow. So I don't know. I don't entirely know what to make of it. What do you guys think? What do you guys think about this one? Am I out to lunch on this, or do you guys see where I'm coming from with this one? Let me know in the chat. All right. Let's see. Okay, so Manel, we got you here, man. It is your time to shine. So, and thank you for all the support, by the way, and thank you for your patience. So, Manel's from Portugal and would like to know about Rentokil, which is basically the main competitor to, at least publicly traded, the main competitor to my great white whale, Rollins. Rentokil. Okay, it's this one right here, RTO. And I remember, thinking it was okay. I don't really have anything against Rentokil necessarily. Like, these financials look pretty, they're trending in the right direction. Not unlike Rollins. It looks like Rollins is just growing at a faster rate. Maybe not in the revenue, but Rollins earnings per share and free cash flow per share are growing faster. This is still growing, but not at the same rate. And the margins, the profitability is way better. Like, for example, Rollins' gross profit margin is like 50% consistently. So these margins are way, way, way lower. And I don't remember about the net income margin or profit margin or the free cash flow margin off the top of my head. And also, Rollins has a lower net debt to free cash flow. Rollins' net debt to free cash flow is only 1.4, whereas, as we can see here, this is 6. So this is a little bit high for me. And the interest coverage is a bit low as well. With that said, though, they do have Rollins beat in the yield department, where Rollins is coming in with, I think, like a 1.4% dividend yield. This one's almost 1 whole percentage point higher. The dividend growth rate's looking pretty good, both the 5 and 10 year. So there is that. This is interesting. I would want to look into this a little bit more to know why the free cash flow payout ratio is so high. But that's just crazy. Earnings payout ratio is not bad. Trailing 12 months, it's not great. And also, another thing about Rollins is the returns on invested capital are way higher than what you'd get with Rentokil. Over the last 10 years, Rollins' lowest year of return on invested capital was in 2020, where and even at their lowest, the return on invested capital was still like 21%. So you're getting much better returns, much better use of capital from Rollins' management team than Rentokil, just based on that metric right there. So while Rentokil's not bad, I just think Rollins is better. So that's why I opt for Rollins, and that's why we're I don't know. I guess that's just why it tends to trade at such a premium, at least so far. So, but Manel, thank you again for your patience, and hopefully all of that made sense. Good question. Yeah, Dividend dude, I think you hit the nail right on the head here when it comes to Archer Daniels Midland. It definitely consistent. Um, it just seems like an all right stock. Yeah, it's all right. And I can't tell you there are so many stocks out there like that I look at it and I'm like, yeah, it's okay. Yeah, all right. But I don't know. I just don't know that I want to own anything where I have that sort of reaction to it, you know. Ooh, good question about Nike. We'll take a look at that one in just a couple of minutes too. We've got a few more Blaze. That's awesome. That's so funny. We've got a few more questions here, guys. We've got 4 more to go through. This next one here comes from Sparty Party, who says, when do you feel investors should transition from dividend growth stocks to a more income-focused portfolio? Well, the thing is, depending on when that investor starts investing, they may not have to transition. Like the starting early and letting dividend growth and the dividend snowball do its thing over the course of 5, 10, 15, 20 years, not 5, let's say 10, 15, 20 years could land you with a higher yield on cost than if you were to just like switch over into high yield dividend stocks. Like for example, if you invest long enough, the yield on cost in your portfolio could get upwards of 9, 10, 12 plus percent, which would probably be higher than a lot of the starting yields from these higher yielding investments, you know, like a Main Street Capital Corporation or an Altria or EPD. If you give yourself a long enough runway, you might not need to transition into high yield investments. You might be okay just staying put in some of these lower yielding stocks. So, but I guess with that said, that's not entirely how it works, right? Because you would still compare the current dividend yield to you would still compare current dividend yield. So like, for example, with SCHD, 20 years down the road, it may still have a 3.5% yield. So even though your yield on cost, no, I think I'm right. I think I'm right the first time. All right, who wants to get him? Chris, you got him? Get him. But yeah, let me know. Do I have that right the first time? Let's get him. Did you get him? Nice. Very cool. So, it probably won't be the first one, or probably won't be the last one, excuse me. Still got 10 minutes to go. But yeah, so that's kind of what I'm thinking. If you just give yourself a long enough runway, you may not need to transition into higher yielding investments. So hopefully that makes sense. But oh yeah, Old Dominion. Yeah. Let's see. Don't try to cut corners. Yeah. So I don't know. I think I'll wrap that question up there. Hopefully, I know that was kind of a roundabout answer, and I got a little distracted from the chat here, but Hopefully that makes sense. Nick has a good question about Old Dominion, so we'll take a look at that one in a moment. This next one's from Joey. Do you have an end goal where you would stop investing and live off dividends? Yeah. As far as stopping investing, that's a tough one. I don't really know about that one. But at this point in time, and this may change down the road, but this is where my head's at right now. I'm kind of thinking that when my portfolio reaches a point where it's bringing in on average $2,000 per month in dividends, which should happen somewhere around when I'm in my like early to mid 40s. I'm kind of thinking I might start areas. I'm kind of thinking I might start pulling my dividends at that point. Like when I'm bringing in 2K per month, I'm kind of thinking I might, take some of that, start using some of that to pay my bills. Not all 2K, but maybe I just use half of that. Maybe I use $1,000 per month, start putting that towards my bills, reinvest the other 1,000, which will keep the snowball going. That's kind of what I'm thinking. There you go. Thank you, Chris. That's kind of what I'm thinking right now as far as when I start pulling my dividends, but there's no end goal. Really, I mean, investing is one of those things. It's an infinite game. It's one of those things that you'll be doing for the rest of your life. So as long as I'm living, like I'm still going to continue to grow this portfolio, and I want to set myself up to where I'm still leaving some in the tank. I'm pulling dividends, using them to pay bills, but still have enough that I can continue reinvesting back into the portfolio and keep feeding that. Wow. Keep feeding that snowball. So that's kind of where I'm at with it right now. But yeah, I think by the time because I'm 31 right now, I think by the time I hit 42, 43, somewhere in that range, I should hit that 2K mark just based on my current trajectory, I suppose. Man, they are in full force tonight. So good question. This is another good one from, it's another good one from Gerald. How many dividend stocks should you own at any given time? This one, and I want to get your guys' take on this too. I'd love to hear your guys' response to this in the chat. But get to a mill, yeah. Sorry, I'm looking at the chat. How many dividend stocks should you own at any given time? It just depends. For everyone it's different, but the general rule of thumb, I think, is the amount of you should own the amount of dividend stocks that you can comfortably keep track of. Because when it comes to investing in individual companies, you don't need to, keep pulse on them every single day necessarily. It's kind of the beauty of being a long-term investor is you can tune out some of the day-to-day stuff, but you want to know what's going on with these companies. You want to listen to the quarterly earnings. You want to, read the annual reports. You want to do those type of things to stay in the loop with the business and know what's going on with them. So I would say that the amount of stocks that you should own, this one's funny. I never understand this one. I'm going to hide the chat for a minute because it's getting distracting. But I would say that the amount of stocks that you own should just, like, how many different stocks can you keep track of? How many quarterly earnings calls can you listen to? How many annual reports can you read? Can you stay up on the holdings in your portfolio? And if it gets to be too much, like if you find yourself not having the time to manage all of that, then you may have too many in your portfolio. And I'm kind of hesitant to assign a certain number to it, because I do think it's going to be different for everyone. But I found that for me, it's kind of around 20, maybe in the low to mid 20s is probably the max that I can do. And, some people have upwards of 30, 40, 50 different positions, which seems to work for them. Some of those people, I think, just fine. But the more positions you have, the harder it's going to be to really stay in the loop on all of your different holdings. So that's kind of the trade-off. And that's I guess, one of the downsides to having so many different positions. So. All right. How do you feel about Nike? Another good question. So we got this one, then we have one more, then we're going to call it a night. So how do you feel about Nike? So I'm kind of torn on Nike. Hide this again. I'm kind of torn on Nike. On one hand, I'm always a little bit hesitant to go with, clothing and apparel brands because fashion tends to be, cyclical, and things are in style and they're out of style. But Nike's different, I think. Nike definitely has some staying power. And I mean, it's been around at this point since the 70s. What's crazy about Nike too is they really were one of the catalysts for the big fitness boom in the country and around the world since the 70s. And they really, at least here in the States, they really kicked off a lot of the sportswear boom. Prior to that, the clothes mainly the shoes that athletes would wear was nothing crazy. You had like Converse was like the big brand, and it was all canvas shoes. And then Nike came along and they made like the Cortez. I don't remember what their first shoe was. The Cortez was one of them, but switched over to like leather or whatever it was. Maybe it wasn't leather. I think it was leather actually. But then that got to be too hot. Athletes were complaining that their feet were getting too hot as they were running. And the cool thing about Nike, Bill Bowerman, Phil Knight, University of Oregon, they were able to test their products that they were making on their athletes, or on Bowerman's athletes, because he was the track coach at the University of Oregon. So anyway, enough backstory. The point that I'm trying to get to is Nike seems to have some staying power, and it's one of the most recognizable, iconic brands in the world. And when you think about Nike, you think of Just Do It. Think about all of the successful marketing campaigns they've had over the years and the ethos behind that. I just don't think that's something that I don't think that's something that's diminished. They've kind of been, I don't know if out of favor is the right word, but they have kind of, at least in terms of running, they have kind of taken a back seat to some of these other companies, shoe companies like Hoka or On. Even New Balance has kind of come back in favor. They've kind of taken a back seat to some of these other companies. And for a while, it seems that Nike was really focused on not so much on athletes and making performance clothing, but more so fashion clothing. And I think that's fine. But, at the root of what they do, it is athletes. Just do it. No excuses. And so it seems with the new CEO, they're remembering that. We see a similar thing kind of going on with Starbucks too, interestingly. And generally speaking, from a long-term point of view, I think Nike will be okay. I mean, the Jordan brand in itself is still growing. It's crazy to know like how much revenue just Jordan drives for Nike. And if you guys want to learn more about Nike, listen to the Acquired podcast. They had a really great, it's long, it's like 3+ hours, but they had a really long and good episode on the whole backstory of Nike. And I think if it's something that you're considering investing in, which I wouldn't blame you right now, it's a really good price. And also, I don't think the company has any debt, or if they do, they have, let's actually look. We can actually look. Let me take this off screen. But yeah, if you're interested at all in investing in Nike, I'd highly recommend listening to that episode. It's got some really good insight on the company, its history, and some of the strengths and weaknesses. They went through that mishap where they were trying to go pretty much all direct to consumer at the, and cut out a lot of their retailers like the Foot Lockers and whatever. And the idea was good. It didn't quite work for them. At the time it did, during COVID it did. But once we came out of COVID, it didn't seem to, they needed their retailers more than they thought they did. So they've had some mishaps these last few years. And still, it seems like they're going through a financially tough time. But I think long-term Nike will be good. I don't think you'll be able to kill off Nike that easily. So, yeah, and I mean the financials still look really good. If we switch to the quarterly view, it's been stagnant, right? Like the earnings per share looks like it's gone down the last couple of years. Free cash flow, there's been a couple of quarters where it's been, been a bit spotty, but for the most part, it's been good. Margins have still been steady over these last 10 years. Yeah, like I was saying, the debt situation is not bad. Net debt to free cash flow is 0.32. So they're bringing in more cash flow every year than they have net debt on the balance sheet. So yeah, this company's not at any risk of going bankrupt anytime soon. And right now, the dividend yield's like double the 5-year average. And, the CAGRs are looking pretty good here. And they've been buying back shares. So there's that. Returns aren't too bad either. 5-year return on invested capital, 17%. It's not too shabby. 10 years, 20%. So I think there's a lot to like about Nike. If you're going to invest in this company, now is a great time to do it. It's one that I keep going back and forth on. Sorry, I'm stuck on Nike now because it is one that I've been thinking about quite a lot lately, more so as I've been getting into running. Because I picked up for an early Christmas present, I got a pair of the Nike Pegasus shoes, which are like the very classic running shoes. They're in their 41st edition now. They've just been making these things forever. And so I've been thinking, like, from a runner's point of view, or from an athlete's, not that I'm an athlete, but from that point of view, someone who uses their products for that purpose, what does that look like? When you go to get a new pair of shoes, do you go with what works? Like, do you just get another pair of the Pegasus, or do you try some of the other shoes? Do you try the, Hoka's? Do you try Brooks? Do you try Adidas? Do you try On? I don't know. I think at this point, I think the switching costs for that type of customer are going to be pretty low. I think if you wear Nike shoes, you would try out other pairs of shoes. So there is that. But still, I don't remember the exact numbers, but still, I mean, Nike's so much larger than even its second competitor, which would be like Adidas. It's still such a much larger business. So yeah, I don't know. I like Nike though. I think to close the book on it, I do like Nike. There's a lot of things that I like about it. So that's funny. Yeah, I see some of you guys talking about the Pegasus. Oh, okay, they fell apart in a Jeremy, you must have been beating up your Nikes. Wow. Nike is buying back a lot of their shoes from Dick's. Interesting. Yes, Nathan, no net debt. There you go. Eddie, do you know why that's the case? Why they're buying back a lot of their shoes? That's very interesting. Yeah, Jordan and Converse, still Nike. True. Nike is liquidating inventory at a discount. Yeah, that was one of their issues. Their inventory was really stocking up. So yeah, Hoka's are super comfortable. Okay. Yeah, Fast Eddie, if you ever find that out, definitely share it. That'd be interesting information to know. So, oh, Matt, what's going on, Matt? Okay, so guys, this is going to be the last question, and then we're going to wrap it up here. This one's from Nick, who asks if I'm still if I'm still high on ODFL. Take my advice. Oh yeah, comfortable feet or happy feet. Yeah, I definitely noticed a big difference. Prior to getting the Pegasus, I was just running. I had a pair of those, and I'll pull up Old Dominion while I'm talking. I had a pair of those. They were Vans. They were like the athletic Vans, and those were okay. Like I ran for probably like the first month and a half since I started running consistently. I was wearing those, and it was good. Felt comfortable. But with that said, interestingly, when I switched over to the Pegasus from the very first run, I noticed a big difference. So yeah, to your point, it does really make a big difference. Yep. Got to take care of your feet. Yeah. You guys ever used toe spacers? Have you ever heard of those? Yes, that's perfect. Right there. Yeah. I mean, Zal, if you want to be a model. Okay, so with that said, before we go over to Old Dominion, Chris is a mod, Matt's a mod. As you guys can see, we've got quite a few characters jumping in here to stir the pot. And so it's come to the point where it's necessary to have some help with you guys as mods. So if any of you guys are interested in being moderators of the channel, basically just patrolling the live chat, if anyone gets a little squirrely in the chat, you just take care of it like Chris has been doing all stream. If any of you guys are interested in being mods and helping out with that, I'd love to have you guys aboard. Here we go. We got another one. B-U-R-T. Bert. Burn in hell. Oops, said a bad word. But yeah, if any of you guys want to be mods, I'd be happy to add you. It's super easy to do. Ideally, you would be someone who tunes into the stream every week or at least on a regular basis. So that's kind of the one stipulation or the one requisite, I would say. But yeah, happy to take some more of you guys on. Got 2 good ones so far. So, and the thing about these live streams, it's usually just, the same group of people every week. So I think all of us kind of fit that description. But yeah, if you are interested in being a mod, if you wouldn't mind, shoot me an email, Ryan at retirewithryan.com. That you can email me, send me a message on Instagram, just at retirewithryan, send me a message on the Discord group as well. You don't have to do all of them, just one of them. You can send me a message on the Discord group. Later, Russ. Good to see you, man. Any which way you can get in touch with me to let me know you want to be a mod, feel free to do so, and I'll add you as a moderator. Okay, so last question, guys. Looking at Old Dominion Freight Line over here, jumping over back to Snapstock. I love this company. I just talked about this company too in my last video, talking about the best stocks to buy in January. I talked about Old Dominion, but it's looking really good. It's had a pretty poor year, actually a pretty poor month. Why don't we just start there? So according to this, down 12% in the last month. Seeking Alpha has it down even more. Like at one point, Seeking Alpha, I think, had it down 20% over the last month. In the last year, it's down 5%. I will say, though, the free cash flow yield at 2.5%, I think is still a bit low. So even though it has come down in share price, I do think that this free cash flow yield is a bit on the lower end. With that said, though, this is pretty in line with the 5-year average. So there is that. It's a bit above the 10-year average. So I guess take that into consideration. And it looks like the dividend yield is quite a bit above the 5-year average as well. Now, scrolling down, just getting into these growth metrics, this is a work of art. Really like this here. Everything is straight up and to the right. Earnings and free cash flow growing by double-digit percentages. Like I was talking about with Rollins, Old Dominion's becoming more profitable over time. We can see the gross profit margin, net profit margin, and free cash flow margin all going up and to the right. Great sign. No debt, or rather negative net debt. So they have more cash and investments on their balance sheet than they have total debt. So I think that's a great sign. It's one of my favorite things to see. So long story short, like Old Dominion just checks box after box after box. And look at like you just can't beat the 5-year growth rate either, even though the starting yield is very low. 36% 5-year CAGR, just crazy. And what's interesting too, this is what I call a dividend growth monster. Okay. What I mean by that, whenever I say dividend growth monster, I kind of use it loosely, but my original definition for it was the dividend growth gets faster over time. And this is the case with Old Dominion. We can see that the dividend growth is actually increasing as the years go on. 29%, 30%, 32%, 33%, almost 50%, and then back down to 34%. So anyway, that's looking good. The payout ratio is kind of starting to jump up a bit. So I would keep an eye on this, but like at the highest, it's 18% in the trailing 12 months. So that's, still very well covered. Same is true with the free cash flow payout ratio, 23%. And if we scroll down, looking at the returns on invested capital, the 5-year is almost 26%. So doing a great job of putting that, all that capital to work and generating a return on it. So, Old Dominion checks a lot of boxes. The one thing about not so much the company, about the industry, is that it's a very fragmented industry. And the same is true when it comes to Rollins. There's just a lot of trucking companies out there. You could go out and buy one truck and start a trucking company to compete with Old Dominion. So the barriers to entry aren't that entirely high if you wanted to get into the industry. But Old Dominion's got brand recognition. They are very reputable. They have a very high, what's the phrase, or what's the way to describe it? They're pretty much always on time. They're hardly late. And I'm not using the right verbiage, but you guys know what I mean. They basically deliver things on time, more on time than their competitors. There's a phrase or a word for that that's escaping me at the moment. But if you go to their investor relations site, they've got a whole investor deck, investor presentation that outlines all of this stuff that I'm trying to spit out, but can't. Anyway, I like Rollins, or I like Old Dominion. I'd say it's definitely a front runner on my watch list right now. It's right up there with Rollins, actually. Rollins, Old Dominion, Zoetis, those three are on my list of stocks that I'm very interested in. So anyway. And I think, guys, this is gonna be. Oh yeah, Miguel, thank you for the kind words. I don't mind the haters. I don't mind it. Yeah, I think punctual is what I'm looking for. Yeah. You know what? This is going to bug me. Okay. We're going to look this up, then we're going to call it a night. So going over to their website. Okay. I guess this is part of it, helping the world keep promises. This is what I was looking for. 99.4% on-time delivery rate, less than a 0.1% claims rate. And this is one of their competitive advantages right here, all of their service centers across the country. So Old Dominion operates, Old Dominion is an LTL shipper, less than truckload, which means that they carry multiple shipments from multiple customers on one truckload. These shipments get distributed through these different service centers and then are rerouted from there to where they need to go. And the thing is, they own something like 90% of all of their service centers. So they have a lot of real estate on their balance sheet as well. So yeah, really good company though. Really, it seems like it's a really high quality company at a pretty ethical company that tries to do the right thing. Unless I'm missing something and there's some sort of scandal I'm not aware of, it does seem like they try to act with a lot of ethics. Okay, guys. Okay. Yeah, we are going to wrap it up here, guys. Good stream though. We had a pretty nice turnout. I think I saw it get up to about 250 people in the stream tonight, which was the highest we've seen it in a long time. Now, before I sign off, guys, just a couple of closing things. Number one, I put out a portfolio video today. So if you're in the mood for some more dividend stocks, dividend investing, and want to see inside my portfolio, just head over to the channel from here. You'll see that earlier today I posted my first portfolio update video of the year. So definitely check that out. On Sunday, I've got another really interesting video coming out. I'm putting the finishing touches on it tonight. And that one's going to be about my 3 biggest dividend investing mistakes. So I'd love it for you guys to tune into that one. I think it'll be a really interesting video. But otherwise, that's all I got for you guys. 2025, here we are. And let's see what happens from here, I guess. But I want to thank you guys so much for hanging out with me this last, what is it now? Where's the time? Hour and 15 minutes. So I want to thank you guys so much for spending the time. I really appreciate it. I apologize again for starting kind of, veering from our normal schedule, but we'll get back to it. Hopefully next week we'll be back to normal. I don't want to promise that it will, because I don't know, things tend to pop up. But as of now, I don't see any reason why we won't be able to do our normal stream at our normal time next week. So unless you hear otherwise, plan for that. I hope you guys have a great weekend, and I will see you in the next one. Thank you, guys.